What's going on, guys? Welcome back. So in this video, I'm going to be doing another stock analysis, and I'm going to be looking at the company Abbvie, ticker symbol ABBV. Now, Abbvie, for those of you that don't know, is one of the world's largest pharmaceutical companies, and if you look at their stock chart over the past year, they have been cut in half. And so in this video, I'm going to be going over exactly what the heck happened with it, kind of talk about all the things that, the market is really talking about it, because if you go on Seeking Alpha, if you go on Yahoo Finance, if you go on even YouTube, a lot of people are talking about Abbvie. And everybody's either in one or two camps. Everybody thinks Abbvie is going to be going bankrupt, or Abbvie is, the cheapest stock in the stock market, and when you take that in and you couple it with their dividend, why the heck wouldn't you buy Abbvie? So I'm going to be going into, kind of giving my personal, what I think is a level-headed approach to what's going on right now, and talk about what is the good and the downside to Abbvie as a stock, and then whether or not I think it is worth buying. And I will kind of disclose this, right off the bat, is that I have already made a couple of videos about Abbvie in the past. And, in my most recent one, I did put it on my 3 stocks to buy for September, because I personally do think that Abbvie is trading at a decent value. So I'm going to obviously, try to not be biased with this stock analysis video, but I do want you guys to know that, just right off the bat, that I am relatively bullish on Abbvie. So if there's a bullish tint to this type of analysis, just make sure that I don't think that, everything is as rosy as I make it out to be, in case it comes off that way. So without further ado, let's get into the video, and as always, guys, make sure to hit that like button, hit the subscribe button, and, let me know in the comment section down below if you like this type of content. It really helps me out, and it helps me make more content that is more beneficial for you guys. But enough talking, let's get into Abbvie. So looking at Abbvie from a top-down standpoint, Abbvie is one of the world's largest pharmaceutical companies. Abbvie, has been, the number one, name in terms of, specialized drug manufacturers, mainly due to the fact that they have Humira. Now, Humira has been the number one drug globally for years and years and years now, mainly due to the fact of that drug is a superstar. It covers so many diseases. It covers so many, essentially lifelong diseases. Humira focuses on autoimmune diseases in large. And so those are diseases that, if you're someone like myself that is born with one of these diseases, it comes up at some point in your life, and it's just in your DNA. There is no cure, there is no, getting around that. It is you get a drug or you get a treatment, and you're on that treatment for essentially your whole life. So everybody's been looking at this stock and at this company and being like, okay, all of their customers that are going to be here are, locked in customers forever, so this is just going to be a cash cow. And Abbvie has shown that time and time again in the past. And if you look at their stock price, with the exception of the past 2 years, it has rewarded shareholders very well. You also take a look at the fact that Abbvie has a massive dividend right now. It's almost 7%. And technically, when they were part of their parent company and then they were tapered off, they have continuously raised their dividend for over 25 consecutive years. And, when you look at their payout ratio, it's, skating around at 50%. So if you look at the, kind of looking at Abbvie from a very glossy type of analysis, you see that, okay, the stock price is down roughly 50%. It's trading at a very attractive valuation, and it has a massive dividend that has been growing and is still likely to continue to grow into the future. So you have income investors that are all over this. Anybody that wants a dividend or a dividend growth investment is all over Abbvie. If you're a value investor and you want to look at, okay, especially if you're a relative value investor, you're going to be looking at okay, what are all the pharmaceutical companies trading for? What's Abbvie trading for? Abbvie is roughly priced 50% off of all of them. Let me buy this, and you have a lot of these people entering into the space. However, there are a couple of things, even if you're in this camp, say I am, there are a couple of things that you really need to be paying attention to that I'm going to get into in just a second. But for anybody that's kind of new to looking at Abbvie, that's just to catch you up to speed, what the heck's going on and why is everybody talking about it? Abbvie essentially has been cut in half very recently, has known to have been an amazing stock to hold over the past couple of years, say over the past decade, and everybody wants to know, okay, is right now one of the best buying opportunities of your lifetime, or right now is this a value trap, and is it just going to continue to go down? If I put my money into it, I'm going to lose all my money, over the next year. So hopefully this video helps you kind of look at that through a more, say, realistic lens, and, I think I understand both sides of the spectrum fairly well. So I think I've kind of already explained, a lot of the bullish part of Abbvie. So Abbvie, obviously, again, Humira, number one selling drug in the world. massive pipeline that is just going to be expected to continue to enter into this space. And, you know, they make a lot of money, they make a lot of free cash flow, their dividend's amazing, their payout yield seems safe. You know, what's wrong? The stock's 50% off. Is that just a 50% off coupon? So now you're going to have to take a look at the pessimistic side and the people that do not think that Abbvie is an attractive buy right now. And Abbvie, like most stocks that are trading with a low multiple in this side of an economic cycle, have a lot of risk to them. So Abbvie's risk, you know, can be really focused on two main news articles that I'm sure you've all heard many times over. The first one being is that Abbvie's #1 drug, Humira, their patent is getting released in the United States in 2023. So that means that, okay, this ticket to fame and 60% of the revenue, mind you, is going to, you know, kind of have a lot of competition enter into the market in just a few years. The market has already kind of seen what's going to be happening due to the fact that in Europe, they've already had biosimilars that have entered the market. And, you know, they've already seen 40% revenue decline from that segment. So everybody's assuming, you know, if you have the same situation happening here in America, you know, Abbvie's going to be losing, you know, 40 to 60% of its revenue from Humira once that patent goes away, like almost overnight. So a lot of people are discounting, you know, say, okay, they're going to lose 60% of their revenue right off the bat. So a lot of people are pricing that in, which I personally think is valid. However, you know, Abbvie is not just a one-trick pony. Obviously, in the past they have been, but there's a whole company working on multiple different R&D projects, and a lot of them are actually, you know, in the pipeline and getting FDA approval or just about to get FDA approval. And, you know, from the way I look at it is like if you take like the next like 6 drugs that Abbvie has lined up, odds are I'm going to assume that when those drugs enter into the market, they're going to be able to recuperate, say, 10 to 20% of Abbvie's, you know, total loss from Humira. So say if it's 60% of the pie and, you know, they lose half of it and it goes to 30 and then they're going to recuperate, you know, say just 10% of it, you know, they only realistically lost about 20% of their overall pie. And now, kind of going off that, the next major headwind that's going on with Abbvie right now is that Abbvie is talking about buying Allergan. So Allergan is a drug manufacturer based in Dublin, Ireland, I believe, and they're the company that is responsible for Botox. So Botox, unlike Humira, mind you, is, you know, a very common household name, just like Humira. However, it is, one, not for, you know, a locked-in patient. It's for people that are getting cosmetic surgery or people that, you know, like are, you know, going in for surgery and that they need to like stitch up their face or something after that, or people that are really prone to sweating, they get Botox injections. And Botox is not patented like Humira is. Botox is a trade secret, so that means that there are other options in the market right now that you can get instead of Botox that are cheaper. However, Botox is hands down, based off all the reviews and based off all of the doctor recommendations, Botox is like still hands down what people go with. So Botox, in my opinion, like that drug in its portfolio, is a relatively safe addition because, you know, it's not like, you know, it has a timeline ahead of it like Humira does. It's been relatively stable, and, you know, I personally believe, based off of, you know, like how the market's been acting in that little segment, I think Botox is going to continue to be the market leader for quite a while, if not forever. So they're thinking about adding in Allergan to their portfolio, and if they get the Botox revenue, you know, Abbvie's revenue pie goes from having 60% of their revenue come from Humira to only 40% of it. So if you have 40%, you lose half of it and you get 20%, and then you put in that 10% that I expect their pipeline to, you know, appreciate to over the next couple of years, you know, you're only realistically losing 10% off of their revenue once this all goes through. So why is this a bad idea? You know, why did the stock price go down when they made this announcement? And that is because they are probably paying a lot of money for Allergan. And in my opinion, they are paying, like, you know, a little bit of a premium. If you look at Allergan's stock price, once this news came up, the stock price jumped up over 30% because of the premium that Abbvie is talking about buying it. So Abbvie is talking about buying Allergan for $63 billion. And, you know, something else that worries, you know, investors such as myself that like balance sheets, especially healthy balance sheets, is that they're going to be paying for this largely with debt. So there's going to be some equity, and then most of it's going to be debt. And if you look at Abbvie's current balance sheet, that's going to be doubling the amount of debt that the company has just to get 20% extra on their revenue, essentially. So that is the big risk. Like right there, that is the big risk. You have a company that is, you know, piling on debt, and their revenues are expected to shrink unless they can execute very well. So that is why AbbVie is currently trading for the biggest discount, is because so many people look at this type of situation and they're like, no, AbbVie is done. They're not going to be able to execute properly. They're going to miss, if they miss like a couple of these major milestones, they are going to be so unprofitable that their dividend's going to get cut. The income investors are going to walk away, or they're going to go find some other stock that's more valuable. And then, you know, it's no longer be trading at that amazing discount because their earnings will dry up. So then value investors won't want it, and the company is going to continue to get sunk down into the hole. So that's essentially like, you know, kind of the whole layout of it. Now, so based off of those two like schools of thought and those two theses as to why AbbVie is either a buy or a sell, I personally think that when you look at the amount of pessimism right now, so like obviously every type of stock analysis, you have to make assumptions and you have to assume that this is going to happen in the future. So nothing, you know, is a sure thing. However, when I do my stock analysis and when I think about buying into a company, I generally look at, okay, what's the pro, what's the con side of this type of investment, and then what is the one that the market is currently pricing in. So currently, with the stock price being down 50%, with a lot of people, you know, kind of showing like, okay, AbbVie needs to trade at a significant discount due to the fact that all this risk is there, I personally think AbbVie is obviously priced to the pessimistic thesis. So when I walk in as an investor, if I think, you know, the probabilities based off of what's getting priced in, if they're either 50%, you know, even or more, you know, like to the optimistic side, which I personally think it's more, you know, swayed to the optimistic side in terms of the company getting over this over the next 5-10 years. If it's already priced in for pessimism and it starts to switch to the optimism, you have, you know, like a golden buying opportunity, because you have the stock price essentially needs to be, you know, like with my models, needs to appreciate 30+%, you know, in order to like kind of level out the pessimism and the optimism. And then you also have the fact that it has an incredible dividend yield right now that is growing at, you know, close to a 20% clip over the past 10 years. So like, there's a lot of positive catalysts that are possibly going for this in terms of giving you a stock return. So in my humble opinion, the way I look at it is that since AbbVie, I personally think, is priced for absolute worst case scenario, even if worst case scenario happens, I think the majority of the loss I would be experiencing as an investor is already priced in. So as long as things don't go, you know, as worse as they could possibly get, I think I will be making money based off of that analysis. Let alone, if AbbVie is able to execute, management's able to execute properly, I think the stock price is already trading at close to a 30% discount, let alone the amount of dividend money I'm going to be receiving. And then once it starts to flip, you know, that's just assuming like, you know, based off a discounted cash flow analysis, it should be, you know, like say between a 20 and 30% premium. If things start to get positive and it starts to be, people start to just expect higher growth than they originally thought, like say for right now into this company, you know, that discount could even be, you know, closer to a 100% discount, because the company's already down 50%. So if they can somehow get as profitable as they used to be, or on that same level of growth, you know, you essentially have a stock that can double over, say, the next 5-10 years with a 7% dividend yield. So in my opinion, it's pretty stacked to it's worth allocating, for me personally, a bit of my portfolio. I'm not going to make this, like, say, my biggest holding by any means, but I'm going to be allocating, you know, say 5 to 10% of my portfolio, you know, over the next couple of months into AbbVie, because I expect that asymmetrical risk reward is just so to, like, my favor. I think it's a worthwhile risk. So that's my overall opinion on AbbVie. Hope you guys got some use out of that. Let me know in the comment section down below. Are you buying AbbVie or are you shorting AbbVie? Like, what do you think is going on with the company, and what do you expect the company to do over the long term? So thank you guys again for watching. I will catch you guys in the next video. Peace.